Welcome to Generational Wealth. In this video, we will discuss risk to reward ratio. What is risk to reward ratio? How do we determine your risk to reward ratio? And a couple of confluences and tools that will also help you to determine your risk to reward ratio. So risk to reward ratio is, in a sum, knowing when to aim for a certain, knowing when to aim when you're aiming for a certain measure of. So pretty much, it is a measure of return in terms of the risk for a specific time, and that specific time will be your entries and your exits. So the risk to reward is pretty much determining our risk, of course, how much we are going to risk to enter a trade, and how much do we expect to profit off the trade. Now, so this will also help you on determining if the trade setup is worth it. Because if the trade risk to reward ratio is not feasible, there's pointless to be taking a trade. That means you're pretty much over trading, or you're pretty much over trading. You're taking a trade with not a high risk to reward ratio where it could possibly go the other way on you. So let's look at an example here. This example I got here was from last week on EJ, which we caught last week actually. So if anybody actually held that trade, would have been in massive amount of profits. So for example, we have our high right here of Tuesday, and then we have the high of Wednesday right here. So being that we know the market tends to get a reversal on Wednesday or Thursday. Also, we have a big fat macro M formation right here as well. For another confluence, we have reason why we took this trade setup and why I called this trade setup out. So let's determine our risk to reward ratio with this setup here. So for example, let me go ahead and place a stop loss on here. So we'll go ahead and put our stop loss right here. Right there. So this stop loss, let's say stop loss would be, let's say 50 pips, for example. This is just an example, guys. So use this based on whatever is in your trading account and whatever you are comfortable with risking. I always recommend no risking no more than 2 to 3% of your account. Okay, so stop loss will be 50 pips right here. Right here. So we just put our stop loss right here. As we see, our entry right here, guys, will be right here. As we see, we never, it never came up to hit our stop loss at all. So makes this trade setup a good setup. So now, being our risk to reward ratio and our risk here on this trade is 50 pips, and we get in on an entry right around here, And once price goes into profit, right, and hit our first zone. Once it hits our first zone, right here, boom, we are now 50 pips in profit, which means the risk to reward ratio on that is a 1-to-1. Sometimes I always say, I might say it backwards or whatever, the risk to reward ratio. So you have to understand the risk to reward ratio on this one, risking 50 pips to profit 50 pips is a 1-to-1 risk to reward ratio. Price moves again to the next zone here. Now we have gained 100 pips, which is making that risk to reward, again, risking the 50 to gain to 100. We're risking a 1-to-2 risk to reward ratio. And then so on, when price dropped down here to our last zone, gaining a total of 150 pips, making the risk to reward ratio a 1-to-3. And so on, as we see in this trade setup, price dropped all the way down to here by Friday, which was apparently 1-to-5 risk to reward ratio, a perfect 1-to-5 risk to reward ratio setup. We risked 50 pips to gain 150, 200, 250. The risk to reward ratio on this actual setup was like a 1-to-5 risk to reward ratio. So, I mean, that sums up the risk to reward ratio on how do you calculate the risk to reward ratio. Now, how do you determine on where to find on if this trade set up, what is the risk to reward ratio? How do you determine that? So how do I like to determine it is, of course, being one of the main thing is my zones, because your zones is going to give you them strong areas of where price is going to tend to come to reverse off of in these strong liquidity areas. So now price scans to stop there and gain more liquidity. So these zones would be one of the confluences you will use to determine your risk to reward ratio, as well as this weekly cycle structure, knowing what day is it? Is it Monday? Is it Tuesday? Is it Wednesday? Is it Thursday? Is it a midweek reversal day? So we should expect a higher risk to reward ratio, or is it just a Tuesday reversal that has been trending or just started trending? So we have to determine a couple different confluences when trading this to determine our risk to reward ratio. Another important one is the ADR. Your ADRs. You have to, you want to know the ADR of that pair. You want to know the average daily range of that pair. So if you're not familiar already with the ADR, check out a previous video. Like I said, you want to know the ADR, the average daily range, will also help you to determine the risk to reward ratio just by measuring the ADR on how on when this pair will reverse, on when this pair should reverse. So you should know when to expect to exit your trade. So another thing about knowing the risk to reward ratio is your strategy. So if you are trading with a certain strategy, or if you have developed a certain strategy and your strategy contains a risk to reward ratio of a 1-to-1, then say you're going to risk 20 pips, gain 20 pips and dip, or whatever the case is, then you have to make sure that your strategy is good. Your strategy is legit. as long as your strategy is legit, you have a 97 or 90+% win rate on this strategy. A 1-to-1 risk to reward ratio is not bad. But 1 to 2 on it is even greater. So you have it. So it all depends on your risk to reward ratio. Me personally, I like to shoot for a higher risk to reward ratio setups. I want a 1 to 3 risk to reward ratio. I want a 1 to 5. So I mean, I want to risk a certain amount to gain a larger amount. I want to profit. So always determine your risk to reward ratio when taking a trade, because when you're not, you're starting to just blindly trade. You're just kind of getting into trades. You don't have a structure. You don't have no discipline. This risk to reward ratio will help you with discipline as well. So determine what's the risk to reward ratio on the trade setup before you even take the setup. Determine if, draw up the zones and determine what's the risk on this trade. If you have to risk 20 pips to gain 20 pips, is it worth it? Or if you're going to risk 20 pips to try to gain 80 pips, make sure the strategy is there, make sure the structure is there, make sure you have checked your confluence, make sure you have checked the ADR, your zones are in line. So these are a couple of things you would want to know when determining a trade setup. So always determine the risk to reward ratio.